What is going on, investors? Are back again. Time to take a look at NIO Limited, ticker symbol NIO. Remember when we looked at this one a couple months ago? I was actually pretty impressed with their business model and the fact that they are delivering quite a few cars into the Chinese market. This is not one of those smoke and mirror type companies. They are manufacturing and delivering cars, and I was amazed how quickly they've gotten off the ground. Considering you look at the United States market, Tesla has been around for like a decade, and no other automaker is even close to delivering cars at the pace or at the quality that they are. And when I look at these NIO cars, man, it's really impressive. So we're going to jump into the most recent numbers. They literally just came out about 30 minutes ago. We'll take a look at the deliveries. We'll take a look at the financials too, kind of from a higher level, and then a little bit more granular level here. I'll dive in here, and then finally we'll jump over to the stock chart as well. So this stock, what jumps out as me is this $63 billion valuation. I mean, that is just massive, massive valuation. You see selling off just a little bit in the after hours. Could be just a little bit of profit taking. This stock has gone from about $26 a share up to $45 a share, really in the matter of about a month. And so this stock has just really been rallying hard, kind of pulling forward probably a lot of the gains or a lot of the things investors probably saw within this quarter. Now, in the most recent quarter, estimates were that they would make about $616 million US, and that actually came in, they actually came in a little higher than that. They earned a very unlucky number here, 666.6 million. So they came in right here at this revenue mark for United States dollars. So that beat this top line revenue estimates by about $50 million. So they did really nice in that sense in terms of a revenue. Now we see here from deliveries here, we've, Q3 of this most current quarter, they had these 12,000 deliveries. That compares to 10,000 in the previous period. And then all the way Q1, they only delivered 3,800 vehicles. And then last year, Q4, they did about 8,200 vehicles. So they've just been really accelerating these, it looks like Q4 is a big delivery. And so maybe this next quarter will be even better, because I noticed in 2019, they delivered 8,200 vehicles, and they did about 8,000 in the previous Q4. And so it looks like it drops off in Q1, and then Q2, Q3, it picks up. And then, so what I'm expecting is a Q4 that will be really good for NIO in terms of deliveries. Let's take a look at how they're working things out financially. This is in the local Chinese currency, this RMB. So if I say dollars or anything like that, just forgive me, since that's what I'm typically used to. So we've got vehicle sales here. We've got Q2. This is the Q3, excuse me. The most recent quarter is right here. This is the previous quarter right here, and then the previous year right here. And so you can kind of line these up too with just the delivery, since we did 12,000 in the most recent quarter, and we did, in the previous period, we did 4,800. So, we almost tripled our deliveries. And so things looking really solid from the vehicle sales perspective. Went from 1.7 up to 4.2. Vehicle margin, this is definitely something that you want to pay attention to. Take a look. In the previous year, they were actually losing money, which is not necessarily a bad thing, not necessarily something that's uncommon as well with companies that are just starting up. They were at a negative 6.8% margin. So you were literally getting the cars for less than what it cost to build. They turned positive in the Q2 just last quarter at 9.7. Now we're up to a 14.5% margin. I think if you jump over to Tesla, they're similar. They may be a little higher, but a similar margin. So they're on pace for that type of thing. We've got total revenues here. I think they've got some service revenue mixed in, not much. So we've got about that 4.5 in revenue. We've got gross profit here coming in. Since our margins ticked up so much, our gross profit obviously turned positive at 585.8. That is absolutely phenomenal. 12.9% gross margin. Again, that is like basically, it's such an improvement year over year. You see here 2,500 basis point, but also quarter over quarter is just a sensational improvement there as well. We've got loss from operations. So they do have lots of other expenses, but this is also trending in the right direction. You see, we lost 1.16 in the previous quarter. That has improved to 9.46. So they're controlling cost really on all ends, not only manufacturing the cost of manufacturing the vehicles, but also operating the business as well. Man, I can see why this company has actually been on a roll. So we have a net loss here. Again, just slightly favorable to the previous period, but way more favorable, a 58% increase actually over the previous period. So if they keep doing that, this company could potentially be profitable by this time next year. I'm not sure if they're guiding towards that, but if they keep on this trend, you might actually see a profitable company here within the next 12 months. That would be absolutely phenomenal. Now, I want to jump a little bit, dive deeper into the numbers here, just some of their revenue sales. Again, we've kind of gone over these. They had the 4.5 or the 4.5525 total revenues. And you take a look at here. Here it is in United States dollars. So we've got, here's the 666 in revenue. Just keep in mind, this is a $60 billion market cap. So, and we've got about $600 million worth of sales. Just something that you want to keep in mind. Again, this is for 3 months. You can times that by 4. You start backing into a valuation. That is rather hefty, but if you want to compare it to other EV makers or anything hot in this segment, it's not completely out of line. Now, coming down to the other line that I wanted to show you, I just want to show you that the shares outstanding. So we have the previous period here. So here's September of 2019. Here's our most current September. So year over year view in these columns. Since I'm scrolling down here, you won't be able to see it. Notice that we had a 1.028 amount of shares, and now we've got 1.2. So literally basically about 200 million shares added to the share count. That's just something that you want to keep in mind with these companies. While they're young, they're not generating a profit. As we take a look here, our total net loss was $123.5 million. Okay, they got to generate some money somehow, or finance the business somehow, and they're financing it by issuing these shares. And so you just want to keep that in mind. They may or may not have been public back in September 19, so this kind of addition of shares might not be that big of a deal. And if you look at it maybe from a quarter over quarter basis, it's actually barely moved. So that is a positive sign, in my opinion, the fact that they're not really accelerating this dilution over quarter, which is occasionally something that you see. Just something that you want to keep in mind. And again, keep in mind, this is a $60 billion valuation, and we lost about $124 million in the quarter. Jumping over the stock chart, this one's been on a run. We see here the stock, it flattened out here. In fact, it was trading relatively flat here for a long period of time here. This stock was stuck in this, between $20 and $25 per share. And then it just really started taking off. I think as investors started noticing this one, it's actually not a bad stock, in my opinion. It's probably a little overvalued if you want to count it from that sense. But for what they're doing, their products and everything, their market potential is probably pretty high. And so we see the stock has pulled back. I wouldn't mind if you want to jump in, you're dying to have NIO shares anywhere in this box. I think you can potentially buy it. I think we can bump that up just a little bit, and then we can draw probably another channel. Man, it's tough when you don't have a lot of price action in these. It's hard to draw these channels in. It's better when there's more, but we're anywhere in this channel down to 38, 39, up to 48. Again, it's not something that I'm going to be into. It's a little too speculative to me, probably a little too early in terms of where I want to be. And again, you don't necessarily have to be early. If we pulled up a stock chart of Tesla, that is a stock that has continued to rip, and it's a pretty mature company. It's actually been around and been a public company for a long time. So you could have made plenty of money in Tesla this year. You didn't necessarily have to buy it, 5, 6, 7, 8, 9 years ago. Now, obviously, you would have a hefty gain if you had done that. So if you want to be early to this one, anywhere in this range is not that bad. Again, we're sitting kind of to the top of the range. We're near the top of the mark on this one. The only thing that you want to keep in mind is this sector is so hot. It reminds me of 3D printing companies maybe 7 or 8 years ago. It reminds me of 420 stocks maybe 4 or 5 years ago. It just reminds me of all these stocks, the kind of a new sector that gets hot. and then investors kind of rush into it, and then the air gets, the air gets let out of the balloon, so to speak. Now, I think the EV vehicle space probably has a little bit more legs in terms of the type of business that they can produce over the coming years, and so this might not be one of those sectors that kind of comes and goes like we've seen with other ones. So, I'm not. This is one of those kind of quote unquote speculative stocks that I actually think might be worth a gamble. I would wait for further pullbacks, maybe wait for further follow-on offerings. Wouldn't surprise me if they offer more shares and issue more shares into the market. That could pull the stock down or could flatten it out a little bit. Again, you're buying at this elevated range, so I'd be a little careful. I wouldn't go all in. If you had only $1,000 to invest in this one, I'd probably only inch in with a share or two and wait and see what happens. So there we go. That was NIO, one of these companies that is actually kind of interesting. If you want exposure to the Chinese market, you want exposure to the EV market, this one might be for you. So there we go. Hopefully you guys enjoyed this one. Let me know in the comments what you think of this one. Hopefully you guys are doing well out there. We'll be back again soon. Good luck with your investments.